the syllabus, and I hope all of you are already aware of. So your syllabus is broadly divided in two parts. Company law and allied laws. Weightage already known to all of you. Company law goes for 70 marks and allied laws is for 30 marks. So in allied laws, this can be divided in two parts. Mean and only overview. Mean is, first is FEMA, number 2 SCRA, number 3 SEBI, plus ICDR regulations, plus competition. These four are main allied: FEMA, SCRA, SEBI and competition. Then here we have banking, money laundering, then surface I, insurance and IRDA. And those five are listed in priority order. Generally, out of those 5 acts, any 2 will be there in the exam. Which 3 are missing? Most probable are insurance and IRDA. And this portion can give you roughly 10 marks, and this portion will give you minimum 20 or more marks. So in this category, when I have given you 10, so 10 is max possible. If you see the marks allocation for the paper, you may find for 12 marks, for 15 marks, but you have to leave some question in the option, and after leaving the option, it is certainly not for more than 10 marks, right? So this is how you have to understand how you should be going ahead with the preparation. In company law, again we have two parts: Companies Act 2013 and Companies Act 1956. In 1956, first chapter is compromise and arrangement. Next is operation and mismanagement. Then winding up. Then producer companies. These 4 chapters from the Companies Act 1956. Why? Do you know the reason? In all these provisions, except for producer company, reference of Company Law Board or court is there. And in the new Companies Act we have NCLT. NCLT has not been constituted, so until that is constituted, old provisions will continue to be there, right? And even for May 16, there is no likelihood that these provisions will be removed. Same thing is going to continue. Then here we have chapter number 1, dividend, accounts, audit, inspection and investigation, then directors, government companies, foreign companies, then provisions related to NCLT and appellate tribunal, and then we have miscellaneous provisions. Earlier we used to have two important chapters separately, but now those are merged with the directors. And those chapters were intercorporate loan, investment, securities and guarantee. Section 372A. Now this is merged with the provisions related to directors. Another important chapter was sole selling agent, that is also merged with related party transactions. So some of the chapters are removed, but those are not actually removed, those are part of the chapter related to directors. So this chapter is going to take the longest period, minimum 2 days, maximum 3 days. Otherwise, any other chapter is not more than 2 or 3 hours as far as company law is concerned. In this, FEMA may take us 4-5 hours, SCRA another 3 hours. The rest all is in hours. Director's topic is the only one which is in the number of days. And for this exam, this topic will alone carry a weightage of roughly 30 marks. Directors. So very, very crucial, very important things. Is it done? So now starting with the first chapter, dividend. Keep the material with you in front of you. My presentation on the board will be slightly different than what is given to you. And that is your choice whether you want to note or you are comfortable with this presentation. Okay, because when I present it on the board, everything is in the form of charts. But here I have given everything in the tabular format. That is the only difference, otherwise things are going to be same. The very first thing is meaning of the word dividend. What do you understand by the word dividend? Interact. If you interact, things are going to be more interesting. Otherwise, if it is one-way traffic, then it is only me speaking and you are just keeping listening. I really don't know whether you are listening or you are doing something, you are thinking something else. Keep on interacting. What is dividend? It is sharing of profit. Okay. So sharing of negative profit is also dividend. Then dividend word, where from it originates? Divide. Divide surplus money. And what next? First word is divide. What is divided? Surplus money. It is not the profit which is divided. Surplus money. Then end. What is ended? This is the last entry in relation to financial year. Isn't it? After dividend there is no more entry. So all financial entries in relation to financial year end with this entry. So divide the surplus money, what is available, and end the financial year in every respect. That is how the word comes, dividend. Right? Now this is when the company is a going concern. What about winding up? During the process of winding up also this is called dividend. But in winding up, what is distributed? What is distributed during winding up? Assets are distributed? Or surplus assets are distributed? Surplus. What is the meaning of surplus? After paying off all the liabilities, if anything is left, right, those are surplus assets. So when surplus assets are distributed during winding up, that is also called as dividend. So that is the end of company. When the company is a going concern, it is the end of financial year. Now refer the first table. What is given therein? What is the meaning of dividend? When the company is a going concern, it means sharing of the profit. And profit means profit after tax. Because in company law, net profit carries a different meaning. Otherwise, profit after tax is generally referred as a net profit. But in company law, net profit carries a different meaning, and that is relevant only for very, very specific purposes. Managerial remuneration out of net profit. Charitable contribution out of net profit. Political contribution out of net profit. Right? So we don't use the word net profit everywhere. We use the word profit. So for the purpose of company law, when we say profit, we are certainly talking about profit available after taxes. Right? So first line this says dividend means sharing of profits or profit after taxes. And when company is under winding up, it means sharing of surplus assets remaining after settlement of all external liabilities. Now the definition, section 2 subsection 35, they said dividend includes interim dividend. Meaning is not given therein. Simply definition is given. What is the purpose of definition? All the definitions are given in the beginning of the act. What is the meaning of, what is the purpose of definitions? How that word has been used in the act. It may not have the meaning at all. Like this definition, this says dividend includes interim dividend. Now what do you derive out of this? Nothing. Right? But wherever the word dividend has been used, that will always include interim dividend. So when you are reading the provisions related to dividend, you are also reading the provisions related to interim dividend. Right? So that is the purpose of definitions in the beginning of the act. So first of all, read the definitions and then only proceed to read the act. Otherwise, if you apply your own meaning, then some mess can be created. Right? So meaning is clear. Now this chapter is relevant only when the company is a going concern. When company is under winding up, those provisions we'll talk about under the Companies Act 1956. Right? So there we also refer the word dividend, but actually dividend chapter is related to the concept when the company is a going concern. Okay. Now coming to the next table. I'll keep on doing something on the board. It is your choice whether you want to do it or not. Okay. So dividend, there is interim, and final. What is interim dividend and what is final dividend? Interim dividend is distributed in current financial year. So does it relate to current financial year or it can be related to previous financial year also? It is always for the current financial year? No. It is no. I'll give you examples. Interim dividend is the dividend declared by the board between two annual general meetings. Anytime it is declared, it is the current financial year. But in relation to which financial year? Suppose it is declared today, right? Will it be interim or it will be final? If it is declared by the board, it will be interim, right? Now whether this relates to financial year 14-15 or 15-16, that is also recommended by the board, isn't it? Interim dividend during current financial year, it may relate to previous financial year as well, because it is being declared before the AGM. So interim dividend is a dividend which is declared by the board between two annual general meetings. Whenever it is certainly always during the current year. Declare it today, current year. Declare it next year, again next year will be referred as the current year, right? So whenever it is declared, if it is between two AGMs, it is interim. If it is declared in the AGM, then that is final dividend. And the final includes interim. The rate of final dividend includes interim dividend also, right? So suppose today the board declares interim dividend at the rate of 25%, and final dividend is declared at the rate of 50%. How much total dividend is? 50 or 75? 50%, because that 50 includes 25 paid as interim also. Unless the resolution specifically says that this 50% is in addition to the 25% interim dividend already declared and paid by the board. If it says final dividend declared at the rate of 50%, that includes 25% interim also, right? So interim, this is between two AGMs, and this is declared by board of directors. Underline this word. This is directly declared by the board. Now, how come board can declare that? Dividend is a subject matter of AGM. How the board can declare? Now, this is under section 123, subsection 3. Refer the table. This says, the board of directors of a company may declare interim dividend during any financial year out of surplus in the profit and loss account and out of profit of the financial year in which such interim dividend is sought to be declared, provided that in case the company has incurred any loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of the interim dividend, such interim dividend shall not be declared at a rate higher than the average rate of dividend declared by the company during immediately preceding 3 financial years. Now, this is one condition imposed. Proviso is a condition. I'll come to the proviso later on, but the first part says the board is empowered to declare interim dividend. But for the final dividend, it is not same. Final dividend, this is recommended by board and declared by members in AGM. Here we said directly it is declared by the board, but this is recommended by the board but declared by the members in the AGM. And this rate not exceeding the rate recommended by board of directors. Board recommends, approval is by the members in the AGM. Now the question is, can the members change the rate of dividend? They can, but only downwards, not upwards. There is a question in practice manual and answer is not correct. Answer for that is not correct. Okay, so there are some problems. I'll keep on highlighting where the problem is. And examiner doesn't go by the practice manual, he goes as per his knowledge and as per the study material, not as per the practice manual. Right? So even if there are some differences, I'll clarify that. So interim dividend, this is between the two AGMs and declared by the board, and final dividend, it is recommended by the board and declared by the members in the AGM, and the rate of dividend should not be exceeding the rate which is recommended by the board. Right? Why it is so? Because table F, earlier it used to be table A, nowadays table F, standard set of articles, and those become applicable if companies own articles are silent. Right. It is clearly mentioned therein that the rate of dividend declared in the AGM shall not be exceeding the rate which is recommended by the board. Right. Now, coming to the condition, what is the condition given? Now read the second paragraph in the provisions. This is, in case the company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than the average dividend declared by the company immediately during preceding 3 financial years. Right? So immediately preceding quarter, let's say April to June 15. Company has incurred a loss. An interim dividend we want to pay for the preceding year. How much we can pay? Because when you have incurred the loss during April to June, certainly you will not prefer to pay interim dividend for the current financial year. But interim can be paid for the preceding financial year before the AGM. How much rate can be there? In that case, rate not to exceed average rate during preceding 3 financial years. Rate of interim dividend, this is not the condition for final, this is only for the interim because the board is declaring it. The rate of interim dividend should not exceed average rate of dividend declared during preceding 3 financial year only if the company has incurred a loss during immediately preceding quarter. Right. So quarter already ended April to June. If the company has incurred a loss and the board wants to pay the interim dividend, then this condition is applicable. If there is no loss, this condition is not applicable. Right. So as of today, we have a restriction on the rate of interim dividend. But that restriction is applicable only if the company has incurred a loss during immediately preceding quarter. Right. Now something common, once the dividend is declared, it becomes a debt repayable by the company to the members. And any person who is a debtor, he cannot declare that now onwards I am not going to repay anything. Isn't it? Even if he becomes insolvent, he cannot say I am not going to repay anything. Body corporate cannot be declared insolvent. That is a law in India. American law, even body corporate is also declared insolvent. Right. Whatever be the situation, whether interim or final, once dividend is declared, it becomes a debt repayable by the company to the members. And under any condition, as far as law is concerned, it cannot be cancelled by the company. Some superior authority is there. Always central government is reserving a right to waive off any condition for the company. Then maybe in a given situation, central government may allow the company to cancel the dividend already declared. But that is not general in law. So, cannot be cancelled. So, any dividend declared, that cannot be cancelled. Right? Now, when interim is declared by the board, final dividend can be declared by the members in addition to this. But once the final dividend has been paid, no further dividend in relation to that financial year in the EGMs, because EGM is already over. After EGM, which can be other general meeting? Extraordinary. So once the dividend has been paid in the AGM, no further dividend can be declared in the EGM. Right? I read it somewhere that if no dividend is declared in the AGM, then dividend can be declared in the EGM. Not possible. Why? Financial statements already adopted in the AGM. And if you declare dividend in the EGM after AGM, financial statements will change. Readoption is required. And reopening of accounts as of today is not permitted. Only for the dividend. So quite possible somebody might have quoted from some law outside India, but in India as of today, once the dividend is declared in the AGM or it is not declared, further declaration of dividend in the EGM is not allowed. Okay. So that is about interim and final dividend. Now the sources for paying dividend, where from dividend can be paid. Sources. Number one, profit. And meaning of the word profit is already given to you. Profit after taxes of the financial year for which dividend is to be paid. So can we use the profit of current financial year for paying the dividend for preceding financial year? Yes or no? Question is, can I use profit of the current financial year for paying the dividend for preceding financial year? Now going back to the concept of dividend, what is dividend? Surplus profit, right? The profit of the financial year for which you have to pay the dividend. Profit earned after the end of that financial year, that cannot be used to pay dividend for the preceding financial year. Right? Certainly cash generated today will be utilized. It is the profit of the preceding financial year which is being generated, which is being converted into cash now. So we have given profit of the financial year for which dividend is to be paid. Right? So if the company did not have sufficient profit during 14-15, but during current year we have good amount of profit, can I use the profit of the current year for preceding year? Certainly no. Bro? Number two, accumulated profit. Number three, free reserves. I have used the word free reserve, otherwise it is generally referred as general reserves. I am using the word free reserve. What is the difference between 2 and 3? And number 2, I have given accumulated profit. Number 3, I am saying reserves. Any difference between the two?
Accumulated will be the profits which are not transferred to reserve.
Yes. Reserves are created by appropriation of the profit. Reserves are not created automatically. You have to transfer the fund to reserves. And if you don't transfer, then what happens? That is balance, P&L balance, right? So that is what is accumulated profit, is amount of the profit of the preceding years which has not been transferred to the reserves, and this is the amount which has already been transferred to reserves. Then number 4, current year profit. This is only for interim dividend. Can I pay final profit for the current year during the current year? First of all, it has to be in the AGM. Number 2, unless the financial year ends, how do we know what is the profit for the year? So that's why I am specifically saying only for interim. I am not saying for the dividend for the current year. This is only for interim dividend, that we can use the profit of current year. Number 5, money provided by central government. Why the government should provide money? Guarantee. What is the meaning of that guarantee? If the company cannot pay dividend, then government will give us the money to pay the dividend. Have you seen any example? Neither you have seen nor you will see this. Reason being, because prior to 1965, when I was also not there, some government companies made public issues, and in that government was a guarantor for dividend. So those companies, as of today, whether those are functioning or not functioning, government has to provide money for payment of dividend because they are guaranteed by government. So those companies you can count on fingers, hardly 5-6 companies are there, but those are there. After that, all those kind of guarantees are stopped by the government, and in future you will never see that kind of thing again. So this is practically not there, but other things are there. So we have profit of the financial year for which the dividend is to be paid. Number 2, accumulated profit. Number 3, free reserves, and number 4, current year profit. But this is only for interim dividend. Up to this point, things are clear. Now moving to next, deductions before paying dividend. Now whether you are paying interim dividend or final dividend, these deductions should be there, or you should have the provision for these. Deductions. Deductions that will depend upon whether dividend is being paid out of profit or out of reserves. If the dividend is to be paid out of profits of the year for which the dividend is to be paid, first deduction is transfer to general reserves. How much amount is to be transferred to general reserves? Earlier there used to be a table depending upon the rate of dividend. Less than up to 10%, nothing is to be transferred. Exceeding 10% but not exceeding 12.5% and 2.5%, that table is gone. As of today, transfer to general reserve, this is purely optional. Transfer itself is optional, then the rate itself cannot be governed. So whether any amount is to be transferred to reserves or not, that is purely at the discretion of the board of directors. So the rate certainly cannot be governed by law. Number 2, depreciation. Now when we say profit after tax, can you derive the profit without providing for depreciation? So here we are saying depreciation after calculating the profit. What does it mean? All of you have done company audits, and everybody should be knowing that the profit and loss account prepared as per Companies Act and as per Income Tax Act is different. What is the reason for difference? Rate of depreciation is different under both the laws, right? If you want to show higher profit, you calculate the depreciation as per Companies Act. If you want to show the lower profit, you show as per Income Tax Act. And layman doesn't understand that. He says company is a fraud. Prepares 2 types of profit and loss account and balance sheet. Isn't it? A layman really doesn't understand why at 2 different places we are filing 2 different statements. So while calculating your actual profits, you might have provided depreciation not as per the Companies Act. Now do it as per Companies Act. Recalculate. Quite possible as per Income Tax Act you have loss, but as per Companies Act you have profit. So provide depreciation as per Companies Act. If you have already provided on the higher side, still you have the profit, then certainly recalculation is not required. But where the depreciation has been provided on the higher side and because of that the profit is not sufficient to pay the dividend, then you recalculate and provide depreciation as per Schedule 2. Schedule 2 of the Companies Act. That's why we bring it here. Right? So this depreciation, this is as per Schedule 2. And when dividend is paid out of reserves, certainly some conditions are there, but only one deduction is required. That deduction is unabsorbed depreciation or loss for previous financial year or years, and out of the 2, whichever is less. Right? Now, for this I'll give you an illustration. What does it mean? Situation A and situation B. In the situation A, you provide for depreciation of rupees 25 lakhs, and after that you have loss worth rupees 10 lakhs. Depreciation of 25 lakhs, and after providing for depreciation you have loss of rupees 10 lakhs. On the other example, here you have 30 lakhs, and after this you have 40 lakhs. What is the meaning of the 2? In this situation, if you remove the depreciation, then there is a cash profit to the extent of 15 lakhs. Right? So when I say loss of 10 lakhs, means depreciation up to rupees 15 lakhs has already been absorbed in the profit. What is unabsorbed depreciation? This is not loss. This is unabsorbed depreciation. In the second situation, when you provide depreciation for 30 lakhs, after that the loss is 40 lakhs. No part of the depreciation has been absorbed. Why? There is a cash loss of 10 lakhs. Right? And Companies Act doesn't provide deduction for the loss incurred. Companies Act is providing deduction for depreciation. So for which amount deduction should be given? Unabsorbed depreciation. How much amount is unabsorbed depreciation in the situation number B? In this, what is unabsorbed depreciation? Entire 30 lakhs. That is unabsorbed. In the first case, 15 lakh already absorbed against the profit. Right. So we provide deduction only for unabsorbed depreciation. This is only way of writing. Otherwise, we are providing deduction only for unabsorbed depreciation. So here in this case we will provide for this, and here we will provide for this amount. Got this clear? For examination purpose, you have to write this, but otherwise you remove this line. That will give you more clarity. Right? When you have to write it full, unabsorbed depreciation or the loss, whichever is less. But otherwise, these two words will give you answer for the question. For which amount deduction is to be given. It is purely for unabsorbed depreciation.